Hello everyone, welcome to the Solidum Lawyers channel. Today, we're tackling a key topic for the future of the financial sector and the fight against crime, the role of decentralized finance, or DeFi, in preventing money laundering. Stay with us. The world of decentralized finance, known as DeFi, has captured the attention of both tech innovators and financial regulators globally. These blockchain-based platforms allow users to carry out financial transactions without intermediaries, which reduces costs and increases accessibility. However, this same anonymity has raised concerns, particularly regarding the use of these technologies for money laundering and illicit financing. In Ecuador, the financial system is regulated by strict laws such as the anti-money laundering law, which requires financial institutions to apply robust customer identification and transaction monitoring procedures. With the evolution of DeFi, the question arises, how can these platforms, which operate without a centralized authority, comply with regulatory standards? In this video, we will address the opportunities and challenges DeFi presents for money laundering prevention and explore how Ecuador's current regulations adapt to this new paradigm. DeFi platforms, by eliminating the need for a centralized intermediary, give users a level of anonymity that can be exploited for illicit purposes. Unlike traditional banks, DeFi allows people to interact directly with each other, making it harder to trace the origin and destination of funds. In Ecuador, financial institutions are required to implement KYC, Know Your Customer policies, while the decentralized nature of DeFi raises questions about how an effective KYC system can be applied in this context without compromising the core technology. Although DeFi has been criticized for its potential use in illicit activities, it also holds the power to innovate in money laundering prevention. Technologies like those that use smart contracts can program and automate transaction verification and user authentication without the need for a central authority. These contracts can comply with certain regulations if they are designed in a way that automatically flags suspicious transactions for review. In Ecuador, the Superintendence of Banks has begun exploring these mechanisms to ensure that fintech, including DeFi, aligns with local AML anti-money laundering policies. One of the main challenges is the lack of regulatory clarity around DeFi. Globally, regulators are trying to catch up with this emerging technology. In Ecuador, while there is already a regulatory framework to combat money laundering in the traditional financial system, much remains to be done regarding DeFi. The implementation of technologies like blockchain allows for greater transparency in transactions, but the lack of a specific regulation for these platforms creates a gap that could be exploited. The country faces the challenge of creating regulations that strike a balance between fostering innovation and ensuring financial security. In conclusion, decentralized finance presents an unprecedented opportunity to innovate in the financial sector, but it also poses significant challenges in terms of preventing money laundering. Ecuador has the opportunity to lead in creating a regulatory framework that allows DeFi to grow safely without compromising the principles of transparency and legality. If you want to stay up to date with these topics and other legal developments in the fintech space, don't forget to subscribe to our channel and hit the bell to receive notifications. Leave us your comments and share this video if you find it useful. See you in the next video.